Hello, everyone. How we doing tonight? Hopefully, all is well. Just quick confirmation. Can you guys hear me? Yes, sir. Awesome. I'm doing good. Doing good. Feeling a little tired. Still from yesterday. Big week coming back from New York. Got a lot of work. So, you guys know how it is, right? This is a grind. But we keep doing it every single day, no matter what. So, just out here doing my thing. Also, it doesn't help when the NASDAQ doesn't do what I tell it to do. It's that simple, right? I always adjust to the current conditions, but coming in after that NFP week, where just to tell you guys, I had my best week in terms of RR return in a while, in the last 2 or 3 months, pretty much. It was just a huge week for me. So coming into this week right after, honestly, I was just being cocky. I just wanted my plan to be right, and I was trading like my plan was already right, no matter what. I wasn't open to interpretation. I wasn't open to my other possibilities, right? When we were discussing in the weekly outlook, I talked about how we could see a deeper retracement to our liquidity above, right? To our first premium and efficiency. We discussed this during the outlook. Well, during my trading today, I had a little bit of a harder time. You can always scroll through general. I send my executions and you can see my thought process like in real time, right? As I'm thinking it, I say, oh, well, I want to see that. I want to see this. And that definitely will help you guys understand my thought process during the day for sure. But just looking at this right now, after what we did tomorrow, right? I was expecting a previous day high to previous day low or previous day low to previous day high. So I was expecting us either to run down and finally go get these equal lows we've been eyeing for some time now. And I was also looking for example, I was looking for us to, basically, I wanted us to take out one side, go take out the other, or exactly the same framework, but the other way around, pretty much. I had a hard time saying that, but definitely looking for this. If we just concentrate for a second, and I can finally remove this drawing, we have a final leg of retracement. Are we going to go down there? I certainly hope so. But for now, we can leave it. Those 15 handles cost me my pride this week. I am hurt. But if we look specifically at what happened, right, and statistically speaking, seeing our month of January, right, we look at our monthly candle right here. We opened into a high, right? We also formed a low here with SMT. So we had a 50-50 of an open high, open low. But as we discussed when we were live trading it, right, this fair value gap respecting showed us that we were going to be bearish. We are supposed to go reach for these levels. Now we're inducing these levels and retracing one more time, and we might even continue higher, right? Not necessarily going into tomorrow. I'm definitely not going to be looking specifically for us to trade higher tomorrow, but just in general, this is what we call bullshit. It is back and forth. This move did not need to happen, but it did. We are early on in the year, and I guess with yesterday's January, I don't know if you guys were trading then, but yesterday, January, was just a continuation of November. We had a hell of a run higher, right? Going finally for those all-time highs. So I still had that in the back of my mind of January, we're just going to expand in some direction with all this liquidity lower. Definitely my goal. Just being a very high resistance move, right? To just bring it all into one thing, it's really that. It's just been very high resistance to the downside, and that's just been leading to not some unclear days necessarily, because you do have some very clean expansions, which we'll look at in a second, but just smaller opportunity, and you have to be prepared for that as a trader, right? And which I was not prepared for that at all. As I said, I was still cocky from last week. Why is this quality so horrible? Okay. This might be a little better. I don't know if it was doing the same on my share screen, but my quality was just horrible for a second. Let's go to our 15-minute chart. Once again, let's actually go in replay mode so we see our lines from my indicator being plotted correctly. Let's also do this. Let's do noon 30. right here, just so we can see the 10 a.m. open and how we utilized it even later on in the day. There we go. Looking at this, right? What are the first things we're looking for? Well, of course, I wanted us to take out those relative equal lows, but you have to keep in mind that inducement happens in the higher time frames as well, right? So if we expand that far away from it, you have to figure out what is my higher time frame objective for retracement, because once we get there, now I can start shorting again. And for me, that's all about premium and discount, and that is my first premium in efficiency. So I'll just call it is liquidity, right? It's first premium internal range liquidity, which can be an inefficiency or it can be any form of liquidity that we see through a swing point, right? Now, how do I frame my trades? Well, first of all, I need to look at my power of three. What I missed today, which was actually very beautiful, except for one thing, is that we had a nice low form during London, right? This is a key area, key time you're looking for. The issue with this is that there was no SMT. And even looking at it later, right, we're in a 15-minute. I could go in at 1 minute and find out some SMT, which will lead to SMT being found there. But the true SMT was right when we induced our lows, not target, SMT, right when we induced our lows right here. So just with power of three being unclear, and then you had CPI, which just like NFP oftentimes runs on side with price, that just cemented longs for me. That is all. Just we had some sort of structure that suggested that we were going to see a low form here. It was not perfect because we didn't have SMT at this level. But once again, of course, if we go down the time frames, we will find some SMT. Let's see in our 5 minute. I don't see any directly at the lows. I see some right here. I believe that was the SMT I spotted this morning. As I always say, I don't need my SMT to be at a specific point, doing a specific thing. Local, external, internal SMT. I don't even know what that stuff means. I just need there to be divergence. And see, in this case, there was divergence near the low of day, just not A+, because it is not at the low of day, which we can consider a candidate at this point in time. Once we see the news going higher, this is where you get your better SMT, I guess, right? If we just go right here, I was thinking of doing this in my indicator, just having like here, for example, 8:30. Let me just set that up very quickly so that it's ready for the future. Just having a vertical line at 8:30 so I can set that up for my news without having the text label there. Right at the news, we had SMT, right? If we look at that news candle right here, which on ES seems to be buggy. Okay, my crosshair was buggy there. We have SMT at this level. It's very hard to spot here. This is actually higher. Where did I see SMT? Well, I guess I confused myself. Okay, no, it was just before the news. So it wasn't at the news. It was just before the news right here. Let me mark it out. You'll see it from this swing low. It was just still at the news. We had that SMT of ES being stronger, NASDAQ being weaker. From that point on, I always like to say that news fair value gap is a higher time frame point of interest, right? When we have not SMP, when we have CPI and NFP. As I said, guys, a little tired, so I might be messing up my words here. Don't be afraid to make me repeat myself or ask any questions along the way. But did we retrace inside that fair value gap? Well, no, we did not. Even if we include the volume imbalance, as I always tell you guys to be doing, we did not. Which is why you had to go, for example, in a higher time frame, 15-minute, where now you did go into this gap. For my news specifically, and this will be showcased in 2 to 3 weeks when I release the news analysis, the news Judah swing analysis, we will showcase news fair value gaps, and these are the time frames I utilize. I go from the 1 minute to the 3 minute, 5 minute to the 15, and I look at all these inefficiencies in general. I like to look for a deeper retracement. In this case, I would have liked to see a deeper retracement. But here's the thing when you're trading unicorns. I don't need to think about this stuff, which is why I love it so much. I have a model that I know I have an edge with. I have a rule set with that model. That rule set tells me that at 9:30, I am starting to look for unicorns. Now, I had a first one here, which we can clearly see was a loss in this case, right? With our target, of course, being right up there. This one was a loss. I did trade it. right here, and you'll see, I believe, was I trading an inversion fair value gap, or did I enter too early? I believe I entered early then, because I'm looking at it and the only thing I see is right here, but I believe I entered on this one. Yes, okay, so I did not enter early, but if you see right here, you'll see that this inversion fair value gap, the breaker is formed as soon as we trade above here. And is I plan to win here? Yes, we'll talk about standard deviations in a second, brother, so don't worry about this. It was really textbook today, so it's the best day to be asking me to talk about standard deviations. But basically, my breaker was formed here, right, through this pattern that we see of a swing low to a swing high, swing low being taken, swing high being taken, and the next candle after, we traded back down into this inversion fair value gap. Where would my 3PD array stop loss be? Well, I have this inversion fair value gap. I have this fair value gap that formed just above. It is very tiny. It is a 1-tick fair value gap with a volume imbalance. And I have this order block. Even if you did not see that fair value gap, there's nothing else to place your stop on except the fair value gap to the left, which we did respect. And if you'll see, this aligns beautifully with it. So you have a very nice stop loss here, at a bit large, but we've seen days being very volatile right now. So having a large stop loss does not really matter. For me, it has just meant that I've had to switch from minis to micros because I lowered my risk coming into this new year. I was just, basically, I didn't like having risk too high. I wasn't comfortable with it. So coming into 2025, I just decided to scale down, actually, which is not something you'll hear a lot of traders do, but that's how I needed to be comfortable. And so now I'm just trading micros. So the fact that I have a wider stop just doesn't allow me to trade minis, but I can still trade micros. And now seeing from this, clearly, we did not reach this. We got stopped out pretty much right away. I think Emil was talking about it in general, and it is always very good to let price do its Judas swing, right? Let the open form a manipulation before engaging with price. As I always say, I'm just greedy. So I prefer to take the loss instead of missing a move. Let's say 930 is expansion, which now I can pretty much see beforehand. But before, I would just prefer taking the loss and then just re-entering on the trade because I lose 1 R and my average R is 4.2 per trade, by the way. So because of that, I don't mind paying 1 R to make sure I don't miss the move. This is not something I recommend, but as I always say, I like to bring you guys along with it. Yeah, money is money, Emil. But definitely, if you're having a rough time with always entering early and getting stopped out, a great rule to say is just wait for 950. Or if you're really scared of missing the move, which 950 sometimes will make you miss the first leg of the move, but again, as you see here, give you a second opportunity, just wait till 940. 940, that first 10 minute of the open is where you'll see your Judas swing form more often than that, and will oftentimes be linked to manipulation. So specifically that 930 to 940, and then you have that 940 to 950, which is an initial run. 950 to 1010 is your distribution macro. Just a little bit more advanced concepts, and that's something that could be useful. So I am telling you guys, don't take notes about this except that 940 part. So if you're having a hard time, just wait till 940. And you can see textbook here. You had a beautiful re-entry. Let me actually remove these drawings, and you will see that the same pattern formed. I like to use standard deviations to draw my breakers because it highlights the breaker's range, right? A breaker is just a pattern where we look at the symmetry. Swing low to a swing high, that's a move up, followed by a move down, followed by a move up. Let me bring this back to just black. If I move this down, what do you have? And let's just make it pretty for a sec. You have an initial range, followed by the manipulation, followed by a first leg distribution. And what you're looking for is a retracement into it to trade that second leg. That's the full understanding of breakers. And see, you had a beautiful, beautiful breaker just form right after here. See, this is just being weird. Sorry. I just looked at it and my vertical line was at 934. I don't know if you guys saw that. But definitely TradingView having a hard time tonight. But from this initial leg, and also, as you can see from here, this is swing low to swing high. Does this mean that this is also a breaker block? Yes. So you have two breakers here that are just simply overlapping, this one and this one. Whenever that happens, I just like to use the most recent one. And when I talk about just using multiple standard deviations, this is what I mean. It's just I'll draw both standard deviations and see how they align, see how I can utilize them, just picture perfect. Now, see that -4, yeah, it was picture perfect on ES and, well, on MNQ and on NQ. Just wonderful. But on MNQ, those smaller, those bigger deviations, were a little bit smaller, which led to the two being aligned as well. But we'll look into it. There are two types of standard deviations. Just in general, there are multiple types of deviations, whatever, but in ICT trading, there are two main ones. There are breaker block standard deviations, which are oftentimes very underused, and there are manipulation standard deviations. Of course, a bunch of other people have come up with different theories. There is a lot to be learned, a lot to be taught there. Just not something I abide with, because there's just been lower probability, and of course I proved it by using data, and not just because of the range's size. They just are worse objective, speaking statistically. So why would I use something worse just because a lot of people are using it? No reason. Hence why I use the breaker block, the breaker range for standard deviation. So I use the full range, the full initial range of the breaker, plot these standard deviations. I actually noticed that for a lot of people, it's just hard to get settings. So let me actually take a picture of this. TFO is launching an awesome, if you don't know TFO, Trade for Opportunity. He's a great coder. He's a trader as well, that you can find on Twitter. He's launching actually a Google Chrome extension where I can just click on a few buttons and get all the settings for the indicators I have on my charts. So this will be pretty awesome. I'm going to be helping him test that out tomorrow, I believe. So that's going to be just a fun tool for me to share all my settings with you guys. But for now, I'll just drop this in the stage chat. Definitely right-click, save that if you need some fib settings for standard deviations. Now from that, all I do is I know that when I click, my first point will be 1. And as I always say, I like to use the magnet. So I just use a magnet, lock into one position, then hold towards the other swing point. Very simple deviations there. There are a lot. The ones you see on my charts are the ones I use. One standard deviation is the bread and butter. That is your highest probability. Well, of course, not the highest, but that is your high probability objective. I also use it to do some other stuff, which I'm not going to talk about yet. Those will come when we have data on standard deviation, Next, you have 2 to 2.5, right? Just use this as a reversal range. This is where you'd like to see retracements / reversals. And then 4 standard deviations, which is what you call your terminus. From that point on, you would say that your move is overextended. In general, I don't use standard deviations for understanding and stuff. I really just use it to say, hey, this target aligns with my standard deviations. This target is now higher probability. This is where I'm going to be looking to use my targets. And when I have nothing to target, for example, at all-time highs, then I use standard deviations as objective. So a big rundown, a bunch of information vomited there. If you guys have any questions, as I said, no worries. Just ask me. I'm always there. But I don't really have a complicated way to use standard deviations. It's just lines that I know where they align with other stuff. It just makes it better. Speaking from that breaker, finally, you can see that breaker form right on this candle when we traded above. Next candle over, we formed the fair value gap, right? 3-bar pattern. So we finalized it, traded back into it for perfect entry at 942. 3 PDA array stop loss rule here is a little weird, right? Because you have this inversion fair value gap to the left, you have this fair value gap, and then you have this fair value gap, which also aligns with this inversion fair value gap. Basically, you just get 4 PDA arrays for 3, right? So you have 1, 2, and 3 with that inversion fair value gap. Did we inverse that one? No, we had not inversed that one yet. So definitely have a nice stop there. It does mean that to your objective, it is 1.86R. And even if you'd be looking for a partial here, this is 1R, this is too small. Now, in cases like these, I tend to like to get my stop loss a little tighter. But you'll see here that this candle has no bottom wick. So actually, even with my experience and things, I wanted to keep my stop down here. That's just from personal experience. I've noticed that these wickless candles, especially near 9:30 open right here, right? It's at 9:30 open pretty much. I thought that we could have a possibility of trading back down there. So I didn't want to I didn't want to have a stop here just to have to re-enter a second after. So I just let my stop breathe. And what does that mean? Well, it means that I have made a smaller return for, what is that, 200-point move? Yeah, approximately 200-point move. Well, my return was barely 2R, right? Well, actually a little over 2R. You guys can see from my executions, I started take profiting at right here. I actually took profit right here because I preferred to take profit at that 2 standard deviations, which we actually didn't hit here. But if you look on micro NASDAQ, so on MNQ, you'll see that we actually hit our 2 standard deviations, small variations there. I believe I had 1.3R at that point in time, so I just took partials. But since I had such a small R, I decided to add into here and to place my stop break even. So basically at this point in time, once we dove back into here and started expanding higher, so as soon as this 956 candle prints, I'm break even, especially coming into 10 a.m. and I added onto my position that I already took profit. So for example, I'll give you numbers. I don't remember the exact numbers, but approximately I took profit about $400 here in profit, and I was still risking $750. And then, well, actually, no, I was small risk over here. So I took profit $400, but I was risking $400 to $500 approximately. And then I just decided to scale back in here, place my stop at break even, which in turn led to somewhere around this wick, pretty much, since I added on here, average between the 2 positions. And it led to my second trade just offering more risk to reward, right? So if I just enter approximately here, have a stop loss here, you'll notice that on the second move, my R is 2.61 to the same target. So the fact that I was able to scale out at this point in time and scale back in here just allowed me to have a better trade overall, right? A better return. Now, this is not something I necessarily recommend to you guys. If you remember, I believe it was yesterday that I was talking about the implied dealing range, and I'll bring this concept on right here, implied DR, and you'll see that this did not go back down under the 0.5. So following these rules, I shouldn't be adding here. This was a very aggressive add. It is not something I recommend to anyone. Why? Because my win rate on these specific moves is probably, well, I'll get broken even 60% of the time. That 40% of the time, I'll get more than what I would initially have. But that other 60, I just end up losing more since I just didn't let that trade run break even, and I tried to add on extra money. This is really a thing of experience. Sometimes it's luck, sometimes it's variance. Truly, I couldn't tell you because I don't have the data. I like that when I say something, it is backed by statistics, right? It is backed by data. It is backed by backtests I have done, by trades I have taken. And truth is, I'm not quite sure about these ones yet. So maybe they're good for my trading, maybe they're bad, and I'll tell you guys when I know more. But I did want to tell you guys, as I'm trading more and, more so sharing my trading more, I prefer to just tell you. But definitely just this trade, I'd be happy with 1.85. But holding on to that 4 standard deviations would be the clear objective for me. Personally, once we get to this point in time, if I didn't have enough R to take a full position or a full partial at this level, I'd just be taking money out and trailing my stop every time we break a high. So you'll see I'll just know every time we break a high here, right? And that means I would have partial first at the level, then again at this time when we take out this high, then again at this time when we take out this high, and then getting stopped out somewhere in here, right? Looking at this, I didn't want to see us trade back down and flip the 10 a.m. open, so this was actually my stop at this point in time, but I managed to partial all the way. This is the important part. I have to leave early. It was great to be back in here again. Yeah, Magic, I haven't seen you in a while, so it's great to see you too, brother. And no worries if you have to leave early. Have a good one. Anyways, these are always recorded, right? Whether you watch them on YouTube, you're here live with me, or you don't watch it at all, I don't mind. I'm doing these to help the community, to give some value in the free Discord. And at the same time, these aren't just my public journals, right? In 2 or 3 years, I'll be able to go back and say, well, look, I've been explaining my trades and everything, And yes, of course, I'm not showing my executions in the YouTube video and stuff. This is for the people in the Discord, right? But I'll still be able to myself look back at how much I've progressed as a trader if my models change, and just look back at my trading back then. Just some cool stuff to track, to log what you're doing, whether it helps you or not, right? So I do journal on the side, but these are like public reviews. These are just reviews I like to do before then, and now I just do them in front of people. Now, after this long setup, would it be fair to look for a short? Yes, 100%. See how much of a premium we're in. There were a lot of people actually trying to get short here to look for a deeper retracement. And for me, at this point in time, after that objective has been met, 100%, right? We are super overextended to the upside. We just ran very aggressively. It wouldn't be too much to ask for retracement. But when we're trading an intraday retracement, what time frame do we refer to? On the Rise model, in the Rise trading model video, I talk about the 15-minute chart. That is your intraday time frame, which means I would look at my most recent 15-minute range, premium and discount, and look at my first discount and efficiency. In this case, it is a 15-minute fair value gap. So this first IRL is my retracement objective. So I know that I can trade short up till here, and once I reach this level, I can trade long up till here, and once I reach this level, I can now short up till here. And now, of course, we dove in deeper all the way to New York Open, quite beautifully actually. See this reaction, wonderful. And to a 15-minute order block, right? If you are able to see the vision, you can see it directly here to these consecutive candles. So you definitely had a beautiful opportunity there. And if you do trade during lunch, which, as I tell you guys, lunch is very rarely expansion. Today it was. So I never look to trade during lunch, right? How often do we have lunch trades? Not often. So if I would be looking for a trade every lunch, I would make a lot of mistakes and cause a lot of losses. So it's not because you don't get good setups, it's just you don't get them often enough for me to want to spend my time there. So I'm not going to talk about this resulting long, but I am going to talk about this short, right? Because as soon as you take out this level, you can start looking for shorts. As I was long, I was waiting to get stopped out. And see where my invalidation level is actually just after the possible short entry was. So for me, I really wasn't looking for shorts. I was just looking to get out of my trade pretty much. When I'm in a trade, I'm concentrated on that trade and that trade only because I don't want to be flipping. But if your bias was short, well, you wouldn't have taken this long. You would have waited for this objective to be met. Terminus is reached. And now all you're waiting for is a bearish breaker to form. Where's the first bearish breaker to form? Right here. We're not cherry picking here. I'm not telling you, oh, choose this breaker instead of this one. This is the first one that formed, which means it's the first one anyone could have seen. And following that, when was it formed? As soon as we broke this law. So right here. And let me actually remove all the other lines, remove all the fuss. And I'll actually leave this one just to help you guys visualize the breaker. If you're having a harder time, right, this is the breaker range. We'll actually remove this and just, that's why I love using the fib for this and just plotting my standard deviations because it also shows me the breaker range, right? What I meant by standard deviations, beautiful confluence. This is my target. This is my reversal range. It did not reverse at this point in time, right? You can see it. It dove back lower. But this is the kind of stuff that gives me additional confluence to this level and gives me more confidence in it. Looking at this, just going back to the start, we formed a breaker here, which means that as soon as this candle trades at this line, not even past, right? Just at this line, I'm looking for a bearish fair value gap or inversion fair value gap to enter on a trade. I'll zoom in because I like to be very thorough with these things, right? The first one truly is this one here above. Or even, actually, I just saw another one, which I had not spotted previously. That is all the way to the left here, included the volume imbalance, which at this point in time is still valid. We formed it once we trade back into it. But this is already mitigated. I usually don't like to enter on previously mitigated fair value gaps because in my mind, right, in my understanding, this is already balanced, right? We've had buy side delivery, we've had sell side, we reclaimed. We don't need to return there. So am I going to use this as an entry? No. So I'm telling you, once again, I'm being pessimistic. This is the best entry you'll get, but I actually don't want to be trading this because it goes against what I tell you guys most days. So I'd just be waiting for the creation of a bearish array. And if you see right after this move higher, let me actually remove this green line. I'll actually just leave it here so we know this was a previous objective. And let's remove this green line from our face. What's up, bottom frag? Nice to see you in here. So from this, what do I do, right? I have this inversion fair value gap, which actually, let me just draw the top. Well, it's very simple. Now it's just about trading it. You have your breaker that formed right here. From this point on, waiting for a bearish array. Oh, we have a bullish fair value gap. Maybe we inverse this. Waiting for a bearish array, waiting for a bearish array, waiting for a bearish array, blah, blah, blah. We inverse the fair value gap. Next candle over. I enter. It is that simple. Where's my stop? Well, here I have a bearish fair value gap, a bearish inverse fair value gap. I have a bearish fair value gap right above, and I have an order block. When the order block is not the swing point, there's a swing point next to it. I place my stop there. And now you have a super, super tight stop loss there. And all the way to your objective, it is let's choose the magnet, 4.78 R. So you had a beautiful short, definitely better than the low R long that was before. But this is what I traded. I also traded a short, which you'll see in my executions. But my long idea was my first one, right? So I was looking to trade. I basically traded both sides today. Not usually what I like to be doing. And if I was looking back, I would have liked to focus on the short, not because of the result, just because of the overall price action. But I can't control what I do after the fact, right? I just have to keep improving, keep working on my trading. Also, at this point in time, you're needing one last thing, right? You need to see SMT. Now I'm looking through it, and yes, there it is. This is the SMT. Oh, well, I drew it all the way wrong, but this is the specific SMT that you were looking for. So just so I can find my points. Now, these are not swing points on, yes, well, one of them is it. Does it mean it's not SMT? Well, with ICT's words, probably not. You know what? You want some more? You have some right after right here, which are both swing points. So let's actually use this one. Why not? Right? You're always looking for SMT. For me, I was just seeing some SMT on the higher time frame. I knew that was the averages at the highs, so I did not require anything other than that. I should actually make a template for this. Just give me a second here, because I'm always changing that setting when the SMT is it is too small. When it's too small, you can't see the text, so I just place the text on top. Now I just have an extra template here. After this SMT is present, I know that I have my breaker, I have my entry PD array, I have my 3 PD array stop loss rule, I have my target. Now all I need is a partial. 5-minute chart. What am I looking for on the 5-minute chart? The most recent range. Well, it is this leg right here. Of course, there are a lot of drawings right now, but just focus on one thing, which is a first discount in efficiency, which this order block would be, is the wick overlapping? So it would be basically this order block, which is actually to the tick, the same as this fair value gap. So no matter which one you saw, that was it. So that was your retracement objective. This is where you'd look for a partial. If you see that premium discount, definitely good. Honestly, for a trade like this, I would have held out the way just due to the fact that these are equal lows. This is a very high probability objective. Again, with those standard deviations aligning with it just gives me more confluence. But you could have looked for a very early partial here. And following my rules, I would have, for example, if I would have partialed here, I would have won break even after and gotten stopped out. So purely mechanically, would have been a small win. You could have looked also at the 10 a.m. open as a partial in confluence with one standard deviation, which, as I say, is a very high probability objective. But once again, this is where we bring, I'm forgetting the word for it, but a choice, right? Choices. You bring variance. You bring different variables into your trading. And that's where you bring room for error. So at that point in time, purely mechanically, if my bot was trading it, he would take profit here. It gets stopped out, break even after, probably had another short opportunity. Well, yes, I see it right here. So if I just move this out the way, just with this breaker right here, after we traded back into the unicorn, which would have been right here, just would have been a very much of a worse trade in this case. And you would have gotten not stopped out at his, but see, 1R, approximately 1R to your objective, right? We're not trying to be picky because you had your first entry here, your correct entry here. It all depends on where you decided to take profit. In general, you guys know, I speak about it quite often. These levels, these important opening prices are there to help me visualize my higher time frame candles, and I always use them as support and resistance. So they are objectives, and I want to see us flip them, support them, use them as support. I want to see us expand through them, reclaim them, just as a big magnet, a big draw for price. So that would have been a very good objective for this specific trade. And of course, final objective being lower. Once again, I'm not going to speak about this long, right? Anytime you see a breaker, I like to see the opportunity for a trade. And there was right here. This is during lunch. If I would trade every single lunch session, I wouldn't be very profitable during those specific time frames. And then I look at the PM. What do I look for? A lunch rate. Am I looking to short here? No, we just induced a current daily high here and have been running all lunch. No, I'm going to wait for us to take out these highs. Once we take out these highs, then what am I looking for? Well, 2 p.m. power of 3. 2 p.m. power of 3 was super ugly, just going higher but with high resistance. So am I going to look to short this? Well, you can look for a power hour short, so at 3 p.m. But once again, now we're just talking about price. With my specific models, I had 2 beautiful trades in the morning. Of course, one was low return. It happens. You're not always going to get 10 R trades. All right. Yesterday, we had a beautiful R trade. This short was a beautiful R trade, but gave you a lot of scare before reaching your final objective, right? At least if you partialed right here and place your stop break even, you did not get stopped out here. Well, hopefully you had the perfect entry. If you had a little bit of a late entry, you would have gotten stopped out. Once again, variance, right? But just looking at all this is just a very beautiful opportunity followed by a very beautiful opportunity that gives you a high return. Why the hell are you still on your charts? Just go touch grass. And yes, it's a joke, right? Touch grass. Wow, that's funny. But actually just go outside, right? Just go walk, go do something else. I'm still working, right? But when I leave the charts, I leave the charts. I'm not opening them and watching them the whole day while I'm doing something else on my other screen. When I'm working, I'm working. Then I go with my dog and I spend some time out because you need some fresh air in your day, right? Especially with your training. And today I didn't get any fresh air, and look at how I'm talking, right? I am tired. I'm just tired in general. So you can definitely tell when I've had a good day where I've had the chance to take a step back from the charts. Now I'm coming back with a fresh mind. Then that's very much better than what I'm doing currently. So once again, a little bit of a psychological rant to just tell you guys there's more to life than trading. So you definitely, at least I prefer to be looking at some early trades and then just being done for the day. You had plenty of opportunity today, even though it was very high resistance and very tricky on the higher time frame as we discussed. After all of this vomit of information, I spoke pretty quickly today. How we feeling, everyone? Do we have any questions about today, right? We've seen a little bit of a harder day in the past 2 days, right? Harder days to be trading in the New York session just because it's been so aggressive, right? Even if we look at yesterday here, see from the news, this open high resistance movement. I don't see any of you guys asking questions though, so I'm guessing we covered it. It does lead to some longer PA reviews, right? How long have we been in here? Almost 40 minutes, right? 39 minutes right now. So it leads to some longer PA reviews because I like to explain in depth and give you guys an actual knowledge behind this, not just, oh, here's what you should have traded because of this. Yeah, there you go. Figure that shit out. So I'm very happy to be seeing 12 of you guys here who have been listening to me for the past 40 minutes and are still in here, still active. Hopefully none of you are asleep. Seeing Nico type, I'm going to give you a second before we call it off. Also, our most recent announcement has just, our poll has just finished. So weekly outlooks will be changed to 5 p.m. EST. It's awesome. So we'll finally review the markets before it opens. Always a pleasure for us. Nice to see you in here consistently day in, day out. Nice to see you, Mark. That's awesome. Love what you're doing with your bots. Definitely going to be testing some stuff out at that end. Having a hard time recognizing breaker blocks. Could you go over how you identified the bearish breaker block on that short again, please? For sure. For sure. Any breaker block, I'm looking at the symmetry, right? So I'm looking at a swing point to a swing point. And you'll see that picture. You should definitely save that. I believe I just sent it again in the futures chat. Was it to you? It was to another Nico. Is that just another one of your accounts, or is that a different Nico? Help me out here, Nico. Well, I sent it to you yesterday, actually. Different Nico. So I sent the same picture to two Nikos in 2 different days. That is really fucking weird. I'm sorry. But you know the thread I sent you yesterday, right? If you scroll down there, there was a picture about breaker blocks. And what you're looking for is a swing point to a swing point. What is a swing point? High, lower to the left, lower to the right. That's a swing high. So right here is where I start looking. Then you have a swing low here. Higher, higher to the left and right. That's a swing low. Now from that point on, for a bearish breaker, so a bearish range is from a swing high to a swing low. I now need us to go take out the high, as you can see right here. And that is so ugly. Do I have a brush somewhere? There we go. Go take out that high right here. That is worse, whatever. And then all I need is for it to take out the low. It is a mechanical pattern. Nothing else. I'm not scared to say it. I'm not going to be like one of them others telling you this is time-based reaccumulation, blah, 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 whatever the fuck, right? I'm sorry. I take it very personal when I see bullshit like this. But it's really just a pattern. What I'm looking is for a swing point to a swing point, and then I want one side to be taken in no particular way, just that the high be taken. And then when we break the low, the last down close candle is a breaker block. So this whole range is my breaker range, right? It is the range where I look for my breaker. And if I'm looking at the bearish range, I'm looking for the last bearish candle, which will be a bearish breaker. If I was looking at a bullish breaker like we were previously here, you'd look at the last up close candle in a range. I like to use standard deviations on ranges, and then you can easily see if you've taken out the high and the low, right? You want the easiest way to do it? Just take these horizontal rays, which you'll find under trend line, and you'll find horizontal ray, right? You use your magnet. Now that I have it selected, you use your magnet to set it. And here, let me just use this so it's easier to see, to put it on those swing points. And then you just put some like big coloring, whatever. I have a lot of drawings here that I don't want to take away for the thumbnail. So let's actually just put it blue for a second and then see how easier it is to look. Now I can clearly see we traded above that box and then we traded below that box. So from this point on, this is a breaker block. I'm looking for us to retrace inside that box, looking for an onside array, and then take a trade. A little bit of a different way of seeing it. But at the end of the day, that's what forms my pattern, right? Does that make a little more sense? Truth is, with breakers, you're not going to know it until you practice it 1,000 times. They are hard to spot. Every single time I've taught students, their hardest point was breaker blocks. No mistakes there. Like every single time, it was breaker blocks. So the best way to learn them is really just to go on your chart and draw 100 of them, right? When I was learning, I was spending 20-hour days. Now I'm working and I'm spending 20-hour days, but whatever, right? You want to succeed in this area, you either have to take a lot of time, but that time, well, it's going to take a lot of time. Now you can squeeze that time in a shorter amount of time in your life, whatever, if you spend a lot of time per day. But if you're spending 2-3 hours a day, then it's just going to take a little bit longer. Are you still going to achieve that same result? I do believe so, right? I have no issue against people who do it longer because it's actually better. You're going to have less stress. You're going to be able to maintain a job and have some income, right? But just breaker blocks are just a hard part. It takes time. I don't know why, but it takes time. So really just spend some time on your chart, draw them again. When you see me draw a breaker block in peer reviews, whatever, go on your chart, draw it. Of course, you already have the answer, right? You see my video right next to it, just draw it and then try and explain it in your head. Why is this a breaker block? Oh, well, look, this is the range that he found. Okay, well, let me draw it with some colors. So let me just do this, for example. Yeah, this is the range he found. And oh, I can see, okay, look, we traded above and then we traded below. Draw this line. Just draw it. This is what I tell all my students. I just tell them to draw the lines. And all of a sudden, now this is a lot simpler. We just took out one side, then took out the other. Okay, well, cool. There's a breaker inside there. So honestly, that is the biggest thing I could tell you is really just draw them. Draw ranges that you see and see if we traded on one side before going to the other. That is going to be the easiest way to spot it. My pleasure, Nico. Now, we've had quite a bit day. Well, I don't know about you guys, and we've been in here for the last 45 minutes. So how about we call it a day here? If you guys have final questions, I'm very glad to answer them, but I'm going to be quite quick. Thanks for the show. I appreciate you calling it a show. That's awesome. Thank you all for being here. As always, it's really incredible to see you guys coming back, and we're out here talking for a while, and 45 minutes today. It's just crazy to me that people are willing to hear me talk for 45 minutes today. I find myself annoying at points. So thank you all for being here. It was awesome. Good luck trading tomorrow. We'll see each other tomorrow night for another PA review. You guys have a good one.